You gonna launch it or am I gonna launch it?
What'd you ask?
Are you? Oh, it's already launched.
Yeah, we're ready. We just gotta wait till 8:30.
Okay. And did you change the headline, like daily plan, today's date, or whatever?
It's just called Quantuition with Doc McGraw.
Okay, that's the headline every day.
Yeah.
Okay. And are we inviting Vol Trader, or could we let him have a break for today? He talks too much anyway.
Yeah, depending on when you pass the mic over, I still might not have my stuff ready as well.
That's all right. I got plenty of time to babble. We can maybe cut it a little shorter anyway. We're giving away too much free stuff. I think we'll have to gradually detox that.
Just remember, you right now anything can be heard because we are live.
Okay. Oh. You guys heard that? So you gonna start it? Am I starting it? Folks listening, well, I'm not really sure how this new thing is working here.
Yeah, as soon as 8:30, just say good morning, get going.
Okay. In that case, good morning. Now let's get started. Why don't I see? Very elegant opening this morning. Hi. Okay, let's get started, and welcome to another thrilling day of in the markets here. And basically, we're sitting right at this inflection point again. And we have the tape telling us one story, the headlines telling us another story, the flows in the background that are a third story, and all of that. We've gone nowhere in a week. As I mentioned in my weekend update, if my memory is correct, SPX was down 0.1%, like 5 points or whatever it was in the whole week, despite the fact that we undercut the expected move again, and we closed within the expected move again, and we were kind of all over the place. And there's a lot of countervailing forces going on. And, I write about them and talk about them in my Discord, and I wrote a note on Substack, and I'm pretty sure I put it out on X. And the long and short version of it is there's many different forces going on here in the market, and maybe I'll come back around to talk about it. So it's not just the headlines about SaaS or whatever. There's CTA flows, there's leverage ETFs that have to rebalance at the end of the day. There's volatility control funds. There's corporate buybacks going on. There's a macro asset deleveraging. There's the D-dollar trade where everybody jumped into the commodities, into gold, silver, copper, etc., hard assets, oil, because of dollar fears. And this has been going on really since the tariffs, that the boat got too crowded on one side. And so, of course, when the boat gets too crowded on one side, it tips the other way. And the same thing happened with volatility. Everything just got too crowded, and that tends to unwind over time in little violent fits and starts. Okay, so let me pull up the trading view chart. So here's where we are. We're sitting right at the 20 DMA, daily moving average, give or take, an important reference point. I know a lot of people like to use EMAs and all that kind of stuff, but most institutions just go off of the old school 20 and 50 DMA. They're not trying to trade it the way you and I might be. Good morning, Selena. Okay, and so basically, the chop zone, we're trapped between the 20 and 50 DMA. We kind of overcut it a little bit and undershoot it. That's kind of where the short intermediate term focus is. Do we stay within this area? And that's the bottom of the expected move, the 69.80. Do we stay within this area? Do we break out below, and do we break out above? And I give the details of that in my daily plan that my subscribers get. Okay, let's take a look at, speaking of said daily plan, here it is. Okay, so like I said, we close essentially flat. We sliced through the 20 and DMAs in both directions last week. That's to add to the fun. Let's talk about volatility. And so on Thursday, we spiked above 23. We spiked above 23 on Thursday. The VIX 9-day, if you guys have been following me, I've been talking about this. The VIX 9-day was above the VIX on Wednesday and Thursday, I think, if my memory serves me well. So that's backwardation of the yield curve. I'm going to show you that in a minute. Not the yield curve, the term structure. And then during this whole mess, there wasn't a lot of reach for wings. The reach for wings for out of the money puts happened before the move. Now it's mostly the surface just shifting with price and fixed strike vol repricing along the surface rather than specific reach for wings protection. Scott Nations, the Nations Index, actually pointed out that on Thursday, as we were kind of collapsing, calls were being bid up. Out of the money calls were being bid up. And guess what happened Friday? We rallied 2%, go figure. So anyway, that's why I look at this crap and I keep people updated on, on what I see there. And so in the pre-market, we kind of spiked up to 19 vol. I think that was kind of like when Europe opened. I'm not really sure why. And now we're kind of back toward where we closed. And that's kind of where we're chopping around. Also want to show you this. So this is from Unusual Whales. I can't get it to zoom in. Maybe there's a way. I'm going to have to ask somebody there. I'm actually have been planning for a while to do a live stream with one of the guys from there who I know from Gamma Edge days, just on how to better use some of the tools for us traders. And this is where we're backwardated. Backwardated means the front end of the curve is higher priced than the long end of the curve. We should be paying more for volatility further out than shorter in. You pay more for time. That's like if you rent, if you get a hotel, an Airbnb for a month, you pay more than if you get one for a week. The same thing if you're renting volatility for a month or a week. But that's not what's happening here. And so here's where we're backwardated, where the curve is all messed up. And the big one here is for the 13th. And that's this Friday. And we have a bunch of numbers coming up this week. I got them in my notes. And it doesn't really matter to me so much what they are, that the market cares about them. So that's why I care. Oh, yeah. By the way, this 6720 to 7,000 box, we've been there for 4 months, about 4% since October for 4 months. And so that's just kind of where we've been living. Some institutional notes are talking about CTAs, that's commodity trade advisors, trend following hedge funds, are potentially going to be selling $15 to $20 billion this month, even on a flat tape. Does that mean we have to go down? No. That does mean caution, it's warranted. Here's that, what I just showed you there, and this is in my notes. Okay, so today we have Empire State Index. I guess nobody cared. Later in the week, we have retail sales. We have the delayed non-farm payrolls that was from Friday that didn't happen because of the government shutdown. We have PPI, we have CPI, we have alphabet soup, and we have a bunch of Fed heads talking today. They're going to be out there bullshitting all day. We have corporate buybacks going on. So there's a lot going on under the hood. We have the leveraged ETF rebalancing that I talked about in my weekend notes. And that's kind of what's going on here. And so let me just get to a quick overview of customer market maker positioning. And this is using options depth, and I think we have discount links in the affiliate links, whatever they call them, in the YouTube somewhere. I don't know.
Yeah, they're in the YouTube
where things are and what they're called, whatever. All I know is that there's something there somewhere. Okay, and so here, this is market maker net gamma, and just as a net position number, and just as a quick refresher, to the right, this way, means customers sold these options, market makers bought them, so they're long gamma. When you buy something, you're long something. To this side, it means customers bought something, so market makers sold it to them. So they are short that, they sold that. They have to hedge out their deltas as we move. And that's kind of the edge, along with modeling volatility and other stuff that we have, in addition to our normal lines on the chart. We all draw lines on the chart. We're all guilty of that. Otherwise, that's how us traders trade. Lines on the chart, expected move based on delta, that kind of thing. That's kind of what those are the tools we have. And so market maker hedging, as a quick reminder, as we head into these sold bars, customer sold, market maker long, as we head into them from below, market makers have to sell because they're too long. The hedge they put on initially for this. But then, so they sell, acts as resistance, quote unquote, not really, but we'll pretend that's what it means. But then as we recede from it, now suddenly they're too short and they have to buy. So these levels become sticky. We pull to them, we pull away. Does that mean they can't break? Absolutely not. We saw multiple levels like this break slowly on Friday as we ground through them, versus on Thursday, where market makers were short gamma, we sliced through them like a knife. So that's kind of a difference in how they act and knowing where the chutes and ladders are. These are chutes and ladders. These are kind of stall magnets. Also, I want you to notice the number, 500. That's not a lot. So you don't have to do anything. I like to look at these numbers in context of how many contracts are really there. Intraday, near the open, we'll typically see 1,000 contracts or a few thousand. I'm looking at Feb. No, I don't think so. Let me double check. No, I'm looking at the 9th. I'm looking at the 9th. I just, when I set it up, it didn't, they didn't update the 0 DTE, so I guess pick specific. But thank you for looking out for me, because I've been known to do that before. So it says Feb 6th over here, because when I did the chart, like at 3 in the morning, whatever, this didn't update. Let's just update it now. And now on Feb 9th, same chart. Okay. Same, we got, same 500 down here. But it looks a little better. At least people's not going to have to wonder what's going on. So thank you for that. So yeah, so there's 500 down here. So it's not a lot. We typically see trades that size come in early in the day. And so these levels get eaten away. So subscribers to the service in the Discord, we see the intraday trades, and we get to, there's Val, and we get to adjust. Remember, this is conditional. Market, these levels are conditional. That's why my plan is then. If we get, let's go say, to 69.75, market makers have to sell. But if we're down here at 68.30, that doesn't matter. It's conditional. If we're over here at 69.20, there should be some buying pressure or some ladder in this direction. But if we're down here, that doesn't come into effect. So I'd like you people to understand that, and that's something that we explain. So Vol Trader is here. So who's ready to go next? Chewy or Vol Trader?
I'm not ready yet.
Okay.
I can go.
Okay, good. Go ahead, Val.
Okay. Let me share the screen.
Okay, so let me get my stuff off.
Stream one. Allow. Okay.
Well, there you are. Okay, go ahead.
Yeah. Okay, here it is. Let's make it bigger. Okay, so February 9, pre-market. This was done around 2 hours ago, 3 hours ago. I don't really remember. We are starting with the open interest layout, plain vanilla, analyzing that, looking at that. This is the full complex for February. So everything other than the AM expiry at February 20. So everything other than the monthly options. What we see here is a clear cut around 69.20. That's basically where the regime changed between positive gamma and negative gamma. From a full complex perspective, I think this was the level also last week, so it's pretty stable, and it's mostly influenced from those from the monthly options. Those don't trade too much, take on their positions and their hedges, and pretty much stays there. So what we see here is you have a positive gamma regime from 69.25-ish and above, and a negative regime from 6,900 and under, maybe even a bit before that. So this is just like 20,000 foot view. We look now at the 0 DT, the same layout. We can see that the transition zone from an open interest perspective is around 69.10, 69.15. So trend could be positive as long as we hold the 69.15. Becomes negative, the more we lose, 69.10, 6900, and so on. We'll talk in a second about the potential of these moves. Today, the models show a strong tendency for mean reverting with a slightly bearish bias, but I choose to say this is basically mostly mean reverting. We'll go through the models and see it. What's interesting here is that this expectation tilt, which I show every time I come up, has a same odd on several strikes. This is typically a signature of mean reverting. So there is no one strike which is the peak, but rather all of these from 69.40, 69.70, all four have the same odds within the open interest based on Friday's close. So it's like an indecision. There's no real trend to the upside. That's basically what it means. We'll talk about the edges in a second. So we went through the total complex, all the options for February. They show a change in GEX regime starting 69.20 and above, positive GEX, under that negative GEX, with all the dynamics that come with it. Now we look at edges and starting to look at mean reversion. So this is the candy wrap model. For those that don't know, it's like a candy that you twist the paper on the edges. That's where the model shows various concepts of volatility and where they collide and compress. And that basically marks the edge of the market. So what we have here is, first of all, we have around 69.50, 60. We get flat here. So that's like the main mean reverting level. Once we trade that, there's a high odds of mean reverting back to the transitions level we saw before, so back to 69.25 or so. Edges are at 7,000, where you see the bands compressed. And if you get some type of fugazi like Friday, so you can push to the next squeeze level, which is 7,035, which would be a miracle in my eye, but would be an excellent short entry. To the downside, we start compressing 68.50 and under, where we find where basically things cool out, momentum dies out, and we'll go into that in a second. Looking at it from other perspectives, we can see on the upper chart we have in the money multiple support levels, all the way from 68.80 down to 68.50. Being 68.50 being the strongest level if we trade there, but somewhere in the middle, all this level is very supportive and bouncy. So mean reverting to the downside and mean reverting to the upside. Mean reversion here is observed by the fact that the blue line here is totally flat between 69.50. There's no development. We can also see that they didn't really take positions there. Nothing significant in the green and red bars here on the lower chart, where the skew gets flat. There was lack of interest for whatever reason. 7,000 and above, there's some out the money speculation, short calls, stuff like that is up there. And to the downside, once we crack the 6,900, we start getting some hedging pressures within a negative gamma environment that could do something. I doubt it though, because again, we have strong mean reverting. If we were to go down to 68.50, we would bounce back up. So kind of multiple conflicting dynamics today. I think this is mainly what contributed to this mainly is the fact that we just overextended Friday. All those mechanical CTAs buying at the end of the day at whatever price, and just pushing the market to a level where it couldn't be supported by additional buyers. Now, a more high resolution view of the mean reversion dynamics, first of all, what we see here is that things get very positive, or potentially can get very positive, once we clear out the main mean reverting area, which is 6960. If we're able to push that, I think it was the overnight high on the Globex, but from there we can clearly see that this red model starts developing aggressively to the upside, with an impossible level to cross from my model's perspective, which is 7,005, if we even get there. But the main point being that going through all the filters that we did until now, all these models, 6960 and over appears to be where velocity can pick up, and the market will just try to run into 6990, 7,000 for whatever reason. To the downside, again, in the money levels, very strong, appear supportive. So again, if we were to trade 6,900 and under, the more we push towards 6,850, we bounce back above. Here we can see where velocity can develop. Now, what's interesting here is that the blue line is pretty flat all over, like left to right, until you don't really push higher. You don't get any real traction, not up and not down. Here again, we can see that the blue line becomes net positive 6960 and above. So in my eyes, yeah, we can go back to 6960 pre-market highs and stuff like that, or go down, but until we don't really push 6960 with a 30-minute bar, reclaiming that level with a clear close above with some volume, and we get, you know, some hedging to the upside. Until those don't happen, we try to push those levels and get mean reverted back down. So I'll be more aggressively long-sided 6960 and above, but until then, I see it as a range bound. And finally, putting everything on the chart. So from the various models, I choose those levels that overlap and appear in several models. So this is the way I see the chart. Transition being the change in the GEX regime, right? Around 69.25, 15 type of, that white line in the middle of the chart. Above us is the minimum trend to activate if we close above 6960. So I have that orange level. And then upside is where I have that huge hard stop, 7,005 that we saw in one of the models. That's, in my eyes, the maximum that the market could do. To the downside, so first cluster of support, those in the money spikes we saw in several charts, come in around 68.50, 68.75. That's the in the money main support cluster for February 9. And if we were to lose that, which I doubt, we then drop back down to levels from the previous day, where we have the edges of the candy wrap model from 68.20 and 800. So the odds are that we try to push up but fail, and wobble back down, mean reverting, you know, we go up, we go down, we go down, we somehow find our way back to 6,900. There is a bias to the downside, so strong mean reverting if we try to push 6960 and fail, but less strong bounce mean reverting if we were to drop to 6850. That mean reverting value is a bit weaker than the one we have at 6960. That's why I say there is a small bias to the downside. To start being short, only under the white transition level for me, so 6,900 and under, I would be gladly short, and 6,960 and above, I'll be gladly long. That's it. Doc, you there?
Whoops, I had my mic muted. Okay, thank you.
Okay.
Chewy's gonna go next, but I guess I put out a little notice if I could find it. Let me find it. Okay, give me 1 second here. Here we are. Before we get on to the next part of the thing, I just we have some stuff that's new here. And some of you may be following this. Maybe back in December, I mentioned here live and in different posts on Substack that we have some new features and new content and new stuff coming for the new year. Well, the new year is here. Yeah, it's February. It's taking some time. That's probably going to take more time. So what's new? Here's our update. And Julie's going to tell us a little bit more about this. So Discord doors are going to be open. We reorganized the channel. So there's going to be a premium level, Discord with people who, obviously subscribe for the premium content. Get to see the daily plan with the exact levels, with the trading view string, which is this thing where, all the levels are, and vol trader mentioned 6920 intraday pivot, and there it is right there. What else do we got coming up? Because I forget. We have so much stuff going on.
Okay,
I'll
I'll do a quick rundown.
Go ahead. I'll let you do a quick rundown. I'm going to shut up. Go ahead.
If you're in the server already, you might have noticed some changes. Nothing has truly changed other than the way the usability is, kind of the efficiency of the server. Few things that we changed. We changed the ether room, which was kind of just general research and important articles Doc liked. We changed it to the knowledge abyss. We changed all of the trade signals to be from our participant, or the traders that we have, our participating traders, in the trade alerts room. So that one you won't be able to share anything. It'll just simply be alerts from our vetted traders. They'll go in there. You'll know when they enter, when they exit, etc. Another thing that we added was the live Twitter feed. That's going to show you if you're ever seeing a drop or a push randomly and it might be news. Well, you can quickly go over to our X feed in the server and just kind of see if there's anything in there. Now, it's not going to be in the entire X feed, of course, but it will be some of the more prominent figures that Doc and I liked. Another change that we did to the server is we added a free section. It's a pretty limited section in what they can see, but Doc and I might throw some freebies in there from time to time. That's about all of the changes that we made to the server itself. On top of that, like we explained it last week, is the website that launched, docsoptionsgelt.com. But I think those were all of the changes that we were done implementing, Doc.
Yeah, so here's the website, and there's whatever, different tabs. And I think we're going to have to provide a link when I mentioned in my Substack and on Twitter, whatever, that the Discord will be open. You need a link to do that. And maybe if you could throw that in the chat here and on Twitter until I can get that as kind of a standard part of the format. There'll be
yes, I'll share it here live since a lot of our viewers are going to be in that umbrella.
Right.
First things first, guys, you can't join the Discord without a Discord account. So that's
amazing, huh? You can't join Discord without Discord. Go figure.
That's the main thing you got to do when you sign up for the Substack or for the Discord or whatever. You have to have a Discord account first, because when you do sign up, whether it's free or paid, it'll ask you for your username. And if you don't have a Discord username, then you'll get access to absolutely nothing. And that has to be, you have to do that on your end. There's nothing that we can create for you like that.
And once if they have a Discord, let's just assume many people do. And so they're going to click the link that you're going to provide, and what's going to happen?
If you hit the link that I provide, you'll have to go. It'll take you to a kind of a landing page. You'll put in your email, whatever. That's not for us. It's not for emails that we're going to send out or anything. It's just a way for you to manage your account. And then you connect that to your Discord account where it asks you to, and voila, you're in the Discord.
Okay, so you're going to go through whatever onboarding process, whatever it's called, that's going to make you do things, acknowledge things, whatever, and then you'll get into the Discord, and there'll be a chat.
And real quick, guys, it might be enticing to take that free subscription. Keep in mind, we always have and always will offer the 7-day free trial to the paid group. So, don't worry necessarily about paying. Give it a shot. Try it out. See if any of those tools and resources can become foundational to your trading.
Okay, and that's all going to be through the WHOP link.
Yep. Or you can go to docsoptionsgelt.com and just hit that button where it says Trade with Doc.
Oh, where's that? Trade with Doc, right here. Look, we got a button now, folks.
So go ahead and click that, Doc.
Control C. I'm afraid. What happens? Okay, so that's where it takes you.
It'll look a little different because Doc owns the server, so it'll give you a more customer-facing appearance. But yeah, you can join the server for free trial, all that good stuff through there. If you're looking to take my boot camp, you would hit enroll, or you could set up a free call.
Let me scroll. Oh, there it is. Well, no,
or I'm talking more about the original page you were just on, docsoptionsgelt.com.
Let me go back here. Okay, so yeah, where's the boot camp thing?
Right there. Enroll in the Docs Accelerator at the top.
Okay.
I mean, there's a few places. You can go to sign up now down there. You can go to Enroll Docs Accelerator there, or you can book a free intro call at the top right.
Okay, now speaking about the accelerator, so it's kind of a mentorship program. I mean, Huey's got his ES trader, and then I've got something. I've got the written content, and we're working on some recorded content. Now, what I'm thinking, and we're going to talk about it a little bit more, is we're going to have some kind of beta or initial sign up with a few people with the content we have now. I'm going to decide exactly how we're going to launch it, and then kind of build it out, fully, and then it'll obviously cost more, and it'll be more stuff. So yeah, I've never done one of these things before, so we're going to figure that out. But Chewy's done this, for a while, so.
You could also scroll to the bottom. If you go all the way down to the bottom, Doc, you got the calendar.
Tell them about the calendar.
You can just set up a quick call. Either Doc or I will be on the call, and it's just kind of vetting for you to vet us to see if it's a good fit. We want to make sure all of our students have really good feedback and really good results, and sometimes that means turning people away. So we like to set up that intro call with all of our potential students.
Okay, great. Hey, do you have a chart so you can show people how to make money?
Yeah, let's do that. Okay, so right out the gate, let's break down our range for today, or the one I have is 69.67 down to 69.15. Decent sized range. We're right at my pivot now, which is 69.35. I'll give you the upside game plan first. If we can hold this pivot and really hold above my sticky level 69.45, I'll be looking for a trade up to 69.82. Okay. My reject zone has been tapped, so I'm not sure if I want to take it again. I will be taking profits there, of course. If we can break above this kind of ceiling sticky area around here, I see a pretty nice easy move to 7,000. Not sure if we see anything up here, but I think 7,000 is close enough where we'll go tag it. Okay.
And that's ES he's talking about, folks, not SPS.
This is ES. That's correct. If we can't hold pivot at open, I think a nice easy trade down to 69.15, 15-point trade. I think the bounce here will be short-lived, and then we'll make our way all the way down to 68.90 is kind of where I'm capping today's move. I think today will be a little bit of a grind, maybe more of a downside bias, but I am very bullish for the week. So I think the better the sell-off today, the better the week looks moving forward.
Okay, and let me point something out. So in the pre-market, looks like some buyers came in, not a lot, but enough, you know, almost 1,000 contracts, whatever, down at 68.60 puts, whatever that's worth. So I add 20 points, that'll be 68.80 for ES, kind of, you know, where the downside target was. 68.90, which is the bottom of the expected move, is kind of the lose 69.20, 69.10. This 6,900 is zone, you know, cut below here. And it's a pretty, just like he said, from a gamma point of view, relatively easy ride down towards 68.90, the bottom of the expected move. So where are we now? We're at 69.10, 15. So we're kind of right here. We're kind of right hanging on this little ledge, you know, kind of like you saw in the cartoons where like they're hanging on the ledge like of the cliff and like somebody's like jumping on their fingers. That's kind of what we're doing right now here. We're kind of hanging on this ledge and the bears are jumping on the bull's fingers. And so if this breaks, then we go down there and there's detailed instructions in the roadmap that the subscribers get. And I think that's pretty much it. There's one more quick mention. So on Friday, I modeled out a bunch of iron condors for the week using the expected move and using the option depth where the models were indicating that we should hit support and resistance. So I'm not looking for equal premium on both sides or equal delta. I'm looking where within what I would consider the safe zone. And these are all put in on Friday near the close on the alert channel. People saw it. If they want to do it, this is for educational purposes. This is not to teach you how to fish, not to feed you a fish. So, you know, right now they're all decaying. So the February 9th one, the one for today, of course, had the best decay. It filled at 85 cents. You could take it off right now for roughly 50% profit and call it a day and go feed the goats. I have goats, by the way. It's actually a thing. So yeah. And then we'll have them laddered throughout the week. So it's just something that I'm playing with, laddering these iron condors. And again, that's all in the room. It's 9:15. I thought we were going to be done by 9:05-ish, 9 o'clock-ish, but apparently I still have to learn how we can edit this down a little bit so you guys can get your morning coffee and get your trades done. So did you put the link in for how people can access the Discord?
Yep, it's all in the YouTube description.
Okay, good. All right, and I'll make sure to get it in like the emails and stuff that I sent out, and I'll get it on Twitter. It'll be accessible to everybody. Okay, it might take a few days, for me to iron the kinks out of making sure everybody gets the links, whatever, and including it, because I'm not the techiest person, but it'll happen. Okay, everybody, thanks a lot. Stay safe.